supply and demand, those market structure levels that everybody is trading, that you've watched countless videos about, that you continue to trade yet continue to be frustrated when you continue to blow accounts. Why is that? Is because these higher time frame zones, they definitely get manipulated because there is so much liquidity in those zones. And hence, what does it become? It becomes institutional targets. And let me tell you, after almost a decade in the markets, professionally scalping and growing my own personal capital to over 7 figures, millions of traders are getting trapped in these levels, in these daily supply zones, and wondering why they keep taking losses. By the way, I'm not going to show you a cherry-picked example, something in hindsight, something from months or years ago. I'm going to show you why waiting for these zones to be manipulated, specifically the major inducement that I speak about, learning how to wait for that, identify that, and trade away from that is truly going to revolutionize your trading. I'm going to show you something from today's price action, a trade I took today following this exact trade model type that made me over $30,000, almost an annual salary in a single day. So here we can see on my screen is the daily time frame, and on this daily time frame it's very easy to understand that we have a clear market structure shift where we were approaching price action bullish, making higher highs and higher lows. Once we reached the peak in the market, we had a huge sell-off, a huge market sell-off that actually led to breaks of structure, forming lower lows and lower highs and lower lows and lower highs, all the way down to a new market low right here. Once we identified that bearish market push, we can identify it as a bearish main push from a high in the market to a new low in the market, to new territory found. But before I actually continue this full breakdown going from the daily time frame all the way down to the M1 candle by candle to show you exactly how I got in, I want to show you the trade that I actually took. And right here we can see from my TradeZella, I'm willing to refresh it so you can see exactly what's going on. From here we can see my exact entry was here and it's going to be at London Open. This is 11, so in the UK time is going to be 8 a.m. and then we have by the end of session around the New York key window is when I hit my 1 to 10 final TP. So a 2 TP level as always at the 1 to 3 and 1 to 10 level. A very normal trade because we're following the inducements and something that netted me over $30,000. Crazy part is that used to be my annual salary. Now this is a very ordinary winning trade. When I hit my 1 to 3 and 1 to 10, it usually looks something like this. So again, just showing you this for transparency's sake. I don't often show my numbers, but you've seen my public documentation, my live signals that I've been doing for a year and a half, where I'm calling my trades live ahead of time, something that cannot be faked, cannot be manipulated, because it's live call outs. You can see the timestamp and you can go and compare it to the markets. This is absolute transparency. On top of that, you've seen my broker sync journal, you've seen my MyFX book, you've seen everything that you need to see. Just saying this to qualify why you should listen and why you should trust me and why this information is so crucial, because it can truly navigate you from where you are right now to mastering the markets and making ridiculous amounts of money. Not only myself, but within my community, we have dozens and dozens of traders who have made tens of thousands of dollars, got millions of dollars in funding. And if you're wondering how is that even possible, well, come join us. I invite you. We live stream every single day, twice a day. We do daily recaps. We do multiple times a week Q&As. We do one-on-one Zoom calls with every single member every single week. And there's people just like you that were watching my videos not too long ago who are now inside the VIP program, funded with millions of dollars, and have changed their lives. So if you're interested in more information, find the link below and I'll see you on the inside. Okay, so now let's get back into the case study. Thereafter, we saw a very nice complex pullback where we had internal lack of lower high, lack of lower low, and then internal higher high, meaning a bullish complex pullback with internal higher low, internal higher high, higher low, higher high inducement to grab these lows to fuel all the way back to the extreme. So therefore, we can identify that we've had a short-term bullish run, and that is our bullish main push from this low to this high, and our overall direction is bearish. So we have two trends that can play out overall. So we have a few roadmaps that can present. Either from this daily supply zone, we can go lower and then you continue higher. Continue bullish following this bullish trend. Or we could go down here, we could then make a lower high, lower low, and continue this bearish trend from this one. So there is multiple roadmaps, but mainly speaking, this is that inflection point to see if the market is going to go higher or lower. Because as we know, the market could come to this level and just break through and continue higher. So what I'm really interested in is as we approach this daily supply level, a order block. In fact, this is a key area where most traders are taught to look at higher time frame daily zones, better zones, looking for market structure zones, supply zones. These are the areas that everyone is taught to trade. I want to show you exactly how to navigate it so you're not caught up in traps. And in fact, you know the difference between a valid supply zone versus a supply zone that will get induced and then trading after that inducement with increased probability. From my daily time frame, which is my higher time frame package, I move down to my next package, which is my 1/4 hour. I usually prefer the 1 hour time frame. From the 1 hour time frame, usually first step is refining the point of interest, refining that supply zone to a 1 hour level. From that 1 hour level, I'm looking for a relevant imbalance, a relevant zone zone where market structure changed or an inducement came into play. And we can see it's an interesting level because we had a inducement within, but we also had consecutive order flow. And what do we know about order flow? That once we have a break of structure, once we break lower, this order flow becomes trendline liquidity. So that zone could be targeted. And then I want to take it to that imbalance where large injection of volume came in to break that structure. So this is my daily supply zone, potentially a target because of that trendline liquidity. Order flow liquidity becomes liquidity after a break of structure. Okay, now we arrive to the present day on the 1 hour time frame, and we can see that the market arrived into our supply zone bullish. Now we had our first reaction into the zone, and we can see that the market came in bullish, creating a higher high, creating these higher lows, even grabbing some liquidity, doing an internal mitigation. So we know the buyers are in control. Lastly, here we have a build-up inducement mitigation, injection of volume. So buyers are in control. But then we arrive over here, we do an inducement and we push lower. We come back to this zone, which became a smart money trap, induced it, minor inducement right here. So buyers take control once again, despite this zone, showing me that the sellers did not have strength because the buyers are inducing and showing control by breaking structure right away. Thereafter, we see once again, we have a build-up inducement mitigation, buyers strength. So the only thing to really notice on this time frame is that we have inducement-based bullish to break out of that daily zone. So we have actually induced out of the daily supply zone. We've had a major inducement. If you've watched my videos on the liquidity guide, the inducement guides, if you've seen all of the case studies that I've recently done, breaking down in detail exactly the types of inducements, the qualifications, the invalidations, go watch those videos. It's imperative to understand, but this is a major inducement, one of the most important things to watch out for. After that major inducement, I need to know my invalidation. Invalidation is going to be a previous demand, ideally with a liquidity cycle in it. So I'm going to pick this one right here. Reason being is because within this demand area, not only did I have a local buildup, I also had a local inducement, and then I had the bullish push out after that internal mitigation, and I'm simply focusing on that imbalance. So we have found a demand area. Now, what can happen from here? Once the market is bullish, we can have that major inducement grab all this liquidity, and we start to get internal bearish price action. Maybe internal inducements here to show us sellers control. Where are we going to be selling until? We can sell all the way down to this demand. Once we arrive into this demand area, then if the sellers are in control, we can have a small reaction and continue bearish. If the buyers maintain control, then we simply get a replication of what happened previously, which is the market will continue bullish. So we know that price can be bearish until this demand area. So I can look for sells, not only because I've induced a higher time frame supply zone where the overall daily trend was bearish, I've manipulated a daily supply zone with a major inducement. That's a major catalyst. That's a major elastic band that has been pulled, and we're just letting it go and we're expecting an explosive reaction. That's the best case. Worst case, this is just a retracement and we continue bullish, and therefore I have this bearish sequence where my invalidation is my previous inducement. As long as price doesn't arrive here, it's actually very high probability and I'm clear to sell into this demand area. Now from the 1 hour time frame, I jump down to my intraday time frame, that is M15. On this intraday level, I'm simply watching who's in control, market structure plus inducements. Oh, and I want you to remember the domino effect. Once you have a inducement of the day or you find a major inducement, that is your first domino. What happens after that? The next, the domino effect, meaning inducement leads to inducements and inducements and inducements. If I can see that cascade, I can see that the major inducement that happened, that cause and effect that is happening is leading to a continuation. The cause and effect continues on with continued bearish inducements. If I continue to see that, I know who's in control, I know where they're in control into, and I know where the control is coming from, and I can find opportunities to find high probability A+ setup sells. And that's exactly what we can witness. We see the first domino, the major inducement that took out the daily supply, including this smart money trap. Why? Because this previous inducement zone that had equal highs, that had a run of liquidity, price came in. What did it do? Gave sellers a nice bearish engulfing candle and then eventually took them out. We had a major inducement, flat, meaning mitigation, meaning sellers are in control. Then we had a build up, another inducement, sellers are in control. Mitigation with a build up and inducement, sellers are in control. Another mitigation, sellers in control. Another build up, another inducement, another mitigation, hitting a previous supply zone, sellers are in control. And lastly, we have that mitigation leading to a bearish break of structure. So we can see that these inducements and mitigations are leading to bearish pushes. So when I can see that sellers are in control because they're doing build up, inducement, mitigation, and continuation all in a bearish direction, and the buyers are not showing strength, that means it's opportunities to sell pinned by or anchored by this major inducement targeting and magnetized towards this demand area down here. That's really what I'm looking for. Once I've affirmed that seller's strength, I can see clear control. Then I can actually open up my personal indicator, something that I coded specifically for myself that I share with the members to show me exactly what I need to see from Frankfurt Open, London Open, the key windows, the Asia highs and the Asia lows. So I have less things to worry about, less things to think about. I can even see high of previous day, high of previous week, the pip count per session, all the relevant information that I utilize to be scalping at a high level. From here on, we can see my Asia high and Asia low is around here. And then I quickly notice that we have a nice level of liquidity presenting around here. When I look at low of previous week liquidity, we have actually got 1 touch, 2 touch, 3 touches in this area. So I can see that the sellers are in control. We're inducing all the way down. We have a clear target of demand down here, and we have a clear liquidity target of low of previous week. So this becomes a wonderful liquidity target if I can arrive to my supply zone where these sellers are in control, because over here is my last liquidity cycle where we had the build up plus inducement plus mitigation plus lower low. Once I have that liquidity cycle, that becomes my next zone to be potentially respected. I also have to be careful, however, as I mentioned earlier, once this break of structure happens, that becomes trendline liquidity. So I need to trade this before I get a break of structure. And I also need to be aware, I know Asia high could be a target of liquidity, so I need to be aware that we're not going to grab that first. For now, we see that this liquidity cycle is in control, and this becomes my zone to be watching out for. From there onwards, I go down to M1, which I consider home, where I see the most details. I can really see what's going on, who's in control, and I can start to read these details. From this inducement that had a bearish break of structure leading to a low, price doing that internal bullish price action, retracement, complex pullback, mitigating the level, and then continuing lower. This very minor inducement right here, simply allowing price to come higher, and small minor inducement over here to allow price to come higher. We have this clear build up over here, and this is where I'm interested on Frankfurt Open. As we know, Frankfurt Open is a trap time, which is why I have it coded into my indicator. In that trap time, what do we see? We see price give a bearish push. And when I see price give that bearish push, I know a lot of traders are going to be seeing that and thinking, perfect, I'm going to sell over here. We know that Frankfurt Open, smart money zones, equal highs, sweep on Frankfurt Open are more often than not traps. And especially when I compare this to EU, when I put it side by side, I can actually see EU is doing an efficiency of the pullback is simply coming back into that demand area. So I can see that it's not even giving a strong bearish reaction. It's actually respecting a previous demand area. So I'm not interested in that level. In fact, I'm going to say this is clearly a trap, and I'm going to wait for the smart money trap to get induced. So what do I see? Smart money traders getting in, giving them hope, giving them a reaction, inviting in the entries, and then shortly after taking them out. Once I'm seeing that potential inducement, I'm waiting for price to find its high somewhere in the supply level. I'm waiting for that confirmation, and then I wait for my key window coded in London Open as always. So that trifecta is exactly what I wait for. I'm waiting for my London Open, which is time. I'm waiting for inducement, which is manipulation, and I'm waiting for lower time frame confirmation, which we just got on the minute of London Open. We got a bearish break of structure. When I have everything that I love, the trinity I always speak about, we got a smart money trap inducing into a previous liquidity cycle. Liquidity cycle because I had the build up, inducement, mitigation, and lower low. Liquidity cycle getting induced into. We're getting an inducement of Asia midline, inducement of smart money trap. We're getting London Open on the minute, and we're getting a break of structure. Everything that we need. And most importantly, if we remember where we are not only trading that domino that we speak about from the major inducement of the daily supply getting taken out. Domino number 1, domino number 2, domino number 3, domino number 4, domino number 5. Domino number 5 as we arrive into this clear low of previous week liquidity, because we have 1 touch, 2 touch, 3 touch, 4 touches now. We have a clear liquidity target, a clear structure target. This is demand area, and we now have found our trinity. Time window, lower time frame confirmation, and inducement with a higher time frame narrative. We have found a intraday A+ setup, and also if we remind ourselves, if we go to a higher time frame, we have the potential for this trade to not only go to this demand area, but all the way down to this higher time frame demand area. So isn't that interesting? I'm not a swing trader. I'm not going to hold it like that. I've already closed my profit, but it just shows the potential of connecting intra-sessions, scalp style trading. And if you have an edge in swing trading, if you understand fundamentals, you can really hold these positions for a long time. However, I'm a more proponent of lower time frame, get in, get out, get your high risk reward because you get a better rate of return than swing traders. You get a higher trade frequency and therefore overall more profits. So when I've seen this confirmation, I simply mark out an entry over here, put my stop loss at the high around 7 pips, and that becomes my perfect trade. And as always, our 1 to 3 risk reward is my partial, and that's perfect. That's right after this liquidity grab. So even if it induces and reverses on me, I can get my 1 to 3. And then by the end of the day, I hope for my 1 to 10 risk reward, my fixed 2 partial system, always 1 to 3 and 1 to 10. Now you may be wondering why I'm going to enter on this imbalance right here and not the one above. For that, I'm not going to give everything away on YouTube. I think I'm giving away enough as it is. But in your own time, go and think about it, go and study it, and wonder why we shouldn't always trade the highest imbalance. But anyway, as price goes on, we get the break of structure, we get the retracement, we get tapped in perfectly, and then we wait for price to break even. When do we break even? Upon a market structure shift. That is our break even protocol. And then we simply wait for our 1 to 3 level to take our partial 50% volume, and then we continue on to the 1 to 10. Effortlessly coming down towards our 1 to 3, tapping in. Looks like it's also continuing that liquidity to invite in more traders, invite in more liquidity, because all these buyers are going to be loading up, inducing them to create what? Create a perfect smart money trap out of context, out of narrative. Smart money traders are going to be loving this, and they're going to get taken out once again. Boom. And by this point, I have my TP set, I'm break even, and I let the price action do its thing, simply waiting for price to go further and further towards my profit. With this way of trading, when you have a sharp stop loss, you have intra-session volatility on your side, you're able to take trades and get your 1 to 3 and 1 to 10 in a single session, in a single day. And how do you know to hold on to your trade? Let the inducements show you. Inducements don't lie. What do we have over here? Build up of liquidity, inducement, mitigation. Inducements don't lie, mitigation. And slowly but surely, the inducements tell us, structure tell us, everything tells us we should be selling. And by the end of the day, within the New York key window, my second time window to be trading, it gives me the volatility to get the injection of volume to finally find my 1 to 10. So for me, in a single day, 1 to 10, $30,000. And this is something that I've shown time and time again on this channel. You've seen it verified in countless number of ways. If you're not trading like this, I think you're trading blind, because this way of trading is effortless. It's easy on your psychology. And especially if you use higher time frame zones, well, then you've got confidence of an A+ setup. But these things are not just about inducements, not just about liquidity and M1 and hope you figure it out. It's by following a checklist, following a plan backed by data, because as I always say, a restricted trader is a profitable trader.